the physical market, something that should have always overruled the paper market, has pounded the paper hangers, that we used to like to call them, I don't know, into submission, but certainly in a big retreat.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 15th through April 22nd, 2024, while supplies last. First, we feature backdated 1-ounce Silver Kangaroos at $3.19 over spot. We also have 2024 quarter-ounce Gold Eagles at $69 over melt. And finally, we're offering 90% constitutional silver at just $2.75 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Peter Grandich from Peter Grandich and Company. Peter, thank you so much for your time today.
Always a pleasure to speak to you, Elijah.
Well, it's great to have you. Last time we had you on, we were showing a chart of gold, how it was just breaking out of its resistance. And you said it was very bullish. And really, ever since then, gold has gone straight up here at $2,400. Your perspective on this $2,400 level and the run that we've seen?
Well, I'm too old to run around the track, but I'll tell you that I will take a little bit of pat on the back, because it was a journey from 1,200 to 1,650. That's when really banging the table as hard as one can on the physical gold. And understand 1,650 wasn't that long ago. And then to make a very bold, and that's when you and I believe started talking at the end of 2021, I literally said in our planning group to our clients and anybody else that listens, that gold was going to outperform both stocks and bonds, at least for the next 3 years. And to sell general stocks and bonds and own gold, I don't think 0.5% of people did so, even faithful longtime clients. But the fact remains is gold did outperform stocks and bonds. But what really gets you to appreciate that you and I are involved with, I like to call the Rodney Dangerfield investment, because it gets no respect. It, since January 1st, 2000, has also outperformed stocks and bonds. And you would not know that by the amount of people that own it, amount of people that talk about it, and it's still basically treated like kryptonite by the investment community, at least in the United States. That's why, despite being up a lot and due for a correction, I don't think we're close to the end of whatever gold's ultimate price is going to be. It's not as cheap as it was, and it doesn't probably have another double in it. But given all the things that we could talk about, and given how petrified I am of America from a social, political, and economic viewpoint, maybe that is possible. But I do think, if you recall, you and I talked, as others, about a cup and handle formation that we saw for almost 12 years. And we projected that when it breaks the handle, a price of $25.36. So I think minimally, if it pauses here first and then gets to that, or we just keep running till we get there, we're going to have a 2,500 and something number, and then we can take it from there.
And your take on what silver has been doing? It seems like it's been playing catch up in the last couple of weeks, but we're nowhere near all-time highs. Do you anticipate silver to continue to outperform gold?
Well, I'm finally at the point where silver bugs will no longer dislike me, at least for now. I used to get get them aggravated at me at gold shows and all, because I always said it was its kissing cousin, or it was second class to gold, that I would always own gold first and then silver. Not that I was against silver, but for the reasons you just said, it has catching up to do. It's not anywhere near its all-time highs, but its fundamentals have changed dramatically for the better, Elijah. It might not have the monetary, and I think that's what's behind this gold move, is an expectation of changes on the world monetary stage coming, and that's why gold has been heavily bought, particularly by countries looking to move away from things, United States and currencies. But I think silver also, because of the deficit that continues and also the great increase in physical demand for industrial usage, now puts it on the same level. I would rate gold, copper, and silver too close to call on what would be my favorite, where gold had been up until most recently my favorite metal.
No, when it comes to the stocks, I know they had been underperforming for so long, even when gold was just going sideways, a lot of mining stocks were going down. In the last month or so, a couple months, that finally gold has broken out. What have the mining stocks been doing?
Well, in an otherwise, I think, pretty outstanding track record over 40 years that I've been doing this, something that started as a little bit of a blemish a year ago grew into a huge pimple of being on the wrong side of a horrifically bear market by owning mining shares, and particularly junior resource stocks, in an aggressive way. Having said throughout the last 2 years, every few months as they went lower, back up the truck, this is the bottom, went lower, back up the truck, this is the bottom. We have finally seen the bright lights start to come in. We're seeing financings and private placements increasing. We're seeing general, not a lot, never expected to, because Wall Street treats it like kryptonite, gold. But we're seeing the general investment community and journalists at least talking about it. And the simple fact is, because of all the years where mining has been neglected and the physical argument for so many metals continues to be strong, they have to move up because somebody's going to have to go out and find those new resources. But one lesson we learned, which is good for what you do in business, but for those of us who are always considered experts on metals, this was a comment that was made by every major mining participant at mining conference, whether they were money managers, newsletter writers, and there's still some around. They won't bring it up, but I will. We all used to say this: owning mining shares is just like owning gold. Well, the last couple of years proved that wrong, because gold is up 50% from just a couple of years ago, and the average mining stock, including the majors, is down an average 50% from 2 years ago. So it certainly proved better to be in the physical bull, your neck of the woods, than in the mining share and junior resource stocks. But I think that's about to change. There's certainly the best possible signs of that changing as you and I speak over these last 2 years are occurring now.
My typical understanding of the resource stocks is if you pick the right ones, they're going to give you more leverage to the precious metal prices. But it seems like, as you mentioned, over the last couple of years, it's been very odd because the metals have been going sideways, but a lot of these stocks have been falling. So you'd think that they should definitely outperform in the coming months and years if we continue to see a bull market. Your perspective?
So the argument always was, back to the days of my days of a portfolio manager and hedge fund manager, was the reason you own that gold stock producer versus gold is if gold went up $50, you just made an additional $50. But on a company that basically had a fixed cost, $50 could be a 10 or 20% increase. And therefore the leverage was in it. The problem for the mining industry, like every other human being that's been on this earth the last few years, inflation, the cost of doing business. You go back when gold was $500-600, the total in cost for a producer might have been $354. Up until recently, some Canadian producers of high quality had total cost somewhere between $1,600 to $2,000. So even at $2,000, they were barely breaking even. They seem to have gotten control of costs. They've seemed now to be more efficient, and we're starting to see better cash flows in the producers. Now, the juniors and the companies that look for it, that's a completely different story. That's of the highest risk, and Elijah, and I don't let anybody fool themselves. I lost enough money to last several lifetimes in various different deals that we all thought were going to go up. If you're not financially and mentally prepared to lose part of all your capital, don't fool yourself, because in the junior business, failure is the norm. You could buy 10 juniors right now, all claiming and honestly claiming, hey, we think we got a shot of finding something, or we found something. We think it's going to be a mine. But 3, 5, 7 years from now, one or maybe two will have done that. The rest will have fallen short. And with that, so what likely is the price of the stock will not perform well over time. So caution anybody watching this. The majors is one thing, and they're going to be more affected by the metals. But when you're in the junior resource market, you really want to own an assortment of them if you can, because there will be 10 or 20 baggers, as they like to call them, that go up that much. But there's also going to be some that are going to go to. And if you like anybody to ever spend an hour or two on how it can go to zero, call me up again. I'll be glad to do the interview.
Now, do you see this problem of inflation continuing for the miners?
I think it's far less of a problem. Where the big issue is in mining, just to sidetrack for a minute because this is important, and it goes into my thesis of why I focus where I'm only investing in North America, is much of the grades in the key metals. Let's just take copper, for instance. The average grade has fallen that's been produced over the last 10 or 20 years. And understand, the lower the grade, the more rock you got to move for the same ounce or pound in this case, and therefore costs are higher. That's where costs have really, and then when you add the social, political, and economic issues that you're having in a lot of places in the world. You know, I used to say that you could spin a globe, not even point, land in a country and say, yeah, we can go there. That's not the case anymore. I think the world has shrunk dramatically where you could put your head on the pillow at night and not worry too much about something happening locally impacting you. And so for that, and where I am in my life, I'm just focusing on North America. And even in North America, there's nothing you can tell me that would excite me to invest in anything that would be in the state of California, because to me, that's as bad, if not some third world countries. So I think it's better days. There is some catching up to do. The shares, please God, will perform better based on my own personal portfolio. But I do think you're correct that the worst times for them are behind them, and the metal prices are so strong. And here's the key. They're needed. There's a shortage of ample supply going out. You know, everybody's saying, well, the EV story is kind of dying down. And it is. It's not everything everybody thought a year or two ago. But while that's died down, the new hot thing on the block, AI, what they're seeing now, what they expect of how much electricity that's going to be needed in order for AI to work, you know, that's why copper is being so strong. So there's a lot of bullishness for physical reasons for metals, but also for the companies that look for them now. And even though there may be a little more correction in them because, you know, gold looks to me a little bit toppy, a little, you know, somewhat overbought short term. If you're investing past the next few weeks and having a horizon at least for the rest of the year, if not into 2025, I think they're worth looking at.
Now, you know, I believe on your website you had an interview that you recently did, and you also had a quote actually from Proverbs, and I wanted to read it and then get your perspective. The plans of the diligent lead surely to abundance, but everyone who is hasty comes only to poverty.
So I'll put on my planning hat. I've been involved with a financial planning group since 1999, and we actually specialize in cash flow efficiencies, not trying to turn a dollar into 2, 3, and 4. First of all, most American investors don't have a true financial plan. They may have some thoughts and ideas, but it's not structured. And there's no plan B's or C's. And let me tell you where I learned that you need a plan B and C. So when I worked in sports, I had an opportunity to be around the New York Giants for 13 years. I was there with them. I was there the night that they had their team meetings and went out. And I learned right then and there that even though they had a game plan, even before halftime came, they had an alternative if certain things didn't happen earlier in the game. And then, of course, by halftime, a lot of times things changed as well. Most investors don't have that same type of strategy or structure. And they do things mostly from emotion and the seat of the pants. And Wall Street tends to just sell Plan A. Plan A sounds so good, don't even bother reading our disclaimer where we basically announce that's not the case, but Plan B or C isn't. And again, when people, first of all, a lot of Americans don't have any plans. Then most people do what's called needs-based planning. They have young children, so they start to focus on the kids. But before they realize it, as they even fortunate enough to save enough for the kids, they forgot about themselves and they kind of switch over. And then, of course, the biggest problem that you and I have discussed since I've known you, and I think this falls under what you brought up, is at least 7 out of 10 American families are living beyond their means. They are living a lifestyle above where their true finances support. And they do that through borrowing or putting aside things that they should be putting money towards and instead use it to live what they deem or the world tells them is a better lifestyle right now, not recognizing what's coming down the road. And that's why 65% of Americans are working paycheck to paycheck, partly because they just never thought about tomorrow. And it's the other reason why I feel that, we need to build this financial arc that I keep talking about because of all the troubles that are coming down the road. So I think diligency, and believe it or not, there's not a lot on Wall Street either. I think a lot of the business focuses on convincing people from a business standpoint what to do and not educational. In fact, I think we do more education to become an advisor. And once we do, even though there's supposedly what we call CE, continuing education, it's not something that people spend a lot of time or in a sense need to pass in order to continue to have their license. And therefore, I think there's a lack in the financial community of being willing to be diligent. And you and I both know, because we walked from the same faith, putting one's faith on their sleeve in the financial world is very rare. I, to this day, as you and I speak, I'm certain some of my photos in the back, I still get emails from people who I don't know, and they'll never tell you the name, and tell me that basically I could take, I'm going to put it in a nice way, a long walk on a short pier was one recently that I got regarding faith. And by the way, all you faith people, you just use that in order to be successful. So it's very challenging, but you know what I'm saying in particular. But I think without faith and to use the greatest book. Now, people could argue whether the book came from just a bunch of people that got together or the Word of God. Whoever put that together was brilliant, because just about everything that goes wrong has been explained at will in that book. And one of the most interesting things in that book, there's more talks about finance than there is of two of the biggest topics, heaven or hell. So tying faith into finance, I think, is a necessity, not something that is a luxury. I think it should be done all the time.
You mentioned how many financial advisors right now are not really doing their due diligence, and a lot of the American people as well are not considering the future and planning ahead, and they're living paycheck to paycheck. And also, if they do have extra funds, they're often putting it in the stock market. One thing that is concerning right now is what we're seeing for the stock market. It seems to be rolling over. Your perspective on that, once we do enter a recession or an economic crisis that you've been calling for, what do you anticipate will happen to the stock market? Because it seems like the mainstream is just invested in this 60-40 stock bonds portfolio, and those assets probably are going to take quite a hit if we have these economic troubles ahead.
Yeah, and that's why I talk about this financial arc. And so let's first understand, I think this is something that's not discussed at all, almost anywhere. And you giving me, please, the opportunity, I think it'd be worthy for your viewers. The stock market that I entered in 1984 is a dinosaur and really in historical books. And the reason I say that is you may even see it on a certain network. They have people there that are reporting from there, but that might as well be a museum. Most of the trading doesn't even happen there anymore. But back in 1984, when I entered this business, 90% of the trading was the public. And most people in the public were buying stocks to be part owners of businesses. And the ones who were selling it thought, well, that business is worth enough or something else looks good. But somebody bought it from them because they thought the business would be more valuable and therefore the stock price would go up. That's very little of what's moving the stock market today, Elijah. I think this is critical. Over half of the capital that's known to be in equities are in passive income vehicles. They're mostly in funds or with managers who are just passive in their ability or allowed to partake in different things. The people that own that want to track a certain index or group, and only when that needs to be adjusted is that manager called or really allowed to make changes. And of the remaining 50%, I would say 75% at least, if not more, is with people who are using computer programs, algorithms, what have you, to make buy and sell decisions. Now, some are doing it just based on if there's a news event, the computer program is trained that if certain words are in it, you buy or sell this, to very complicated strategies involving stocks and options and futures and all. The amount of people or amount of money that is going still like it used to be part owners of businesses has shrunk dramatically. And why I like to bring that up is the folks like me with receding hair, gray hair, or no hair, or the older or senior citizens still act and believe you should act as what the market was like 30 or 40 years ago. That's probably one of the biggest errors I think is going to happen to people, that's just not the case anymore. Answering your question further about, what happens if markets don't perform as well. It's one of the reasons that I've suggested for the first time, and I didn't come here to talk about my planning business, but in our planning group, only in the last few months especially, have I talked about a vehicle that's out there. They're called equity index annuities. And it's basically like an annuity contract, except you're going to the insurance company and they're saying, listen, we're going to guarantee you no losses or a certain percent of loss where you don't lose any more in exchange for some of the potential upside that could be made. So in other words, we may cap you at 10%, and if the market goes up 20, we keep the other 10, but if it goes down, we take all the losses. And I think given what everybody's facing, all being equal down the road here, willing to give up part of a potential gain, not to lose principal going forward is critical. And let me just close, because I didn't come here to pitch a product or anything, but why that fits into a bigger view of mine. I think the smartest thing you can do, whether we're talking to people like yourself that understand metals and all, financial people, whatever the case may be, what's changed the most going forward, in my opinion, is it's now time to focus on capital preservation versus capital appreciation. And if you're going to try to seek appreciation, meaning turning a dollar into 2, 3, or 4, giving up some upside and turning not to lose some of my principal is very important now compared to what was the last several years. And to this day, and I know people that will watch it from your group, they're watching because they're clients of yours, but America is still totally underinvested in metals. Next to nothing. You can still go out and do a survey now, and despite this huge gains. And in fact, I joked with somebody, I spoke at a luncheon before I came to you. I said, the day we turn on TV and saw a certain couple of networks having their typical talking heads telling us it's time to buy gold, Noah Fraser liar, but I'm going to be calling you. I'm selling. I'm selling. We're so far away from that. It's so I've always called it the Rodney Dangerfield. I've always said that they treat it like kryptonite. And despite the movement and the reasons for the movements, the average investor in a community is still not even taking finally even a half hard look at gold. That's why past the correction and consolidation, which would be very, very healthy at this point, I still think the price can go substantially higher. I hope I didn't go on too long there for you.
No. When it comes to the price of precious metals here, it seems like over the last a few months here, there has been a change where there's a lot of arbitrage opportunity between the West and the East. West and Eastern markets here, Western and Eastern markets here, where there's a physical exchange in Asia that is actually having premiums to the price of gold and silver. Your perspective on that and how it's changing the dynamic in the West, which has been largely a paper market.
Well, you used the key word there, so I'm going to go forward on it, the paper market. For years, those of us who've been around it, in fact, I was very active when I was on the speaking circuit, along with a few other people like Gather.org and all, who would openly speak about the manipulation that continued to happen in the gold market. And we would call tinfoil hats and all, until over the years now, they've arrested and convicted a lot of those people that were doing it. And the person or persons that used to claim we were nuts are no longer around. But having said all that, the COMEX, where still in the U.S. trading happens, some of us, and I'm one of them, nickname it the Crimex, because the paper market would always seem to have a different perspective on the gold price than the physical market did. And as trading moved towards Asia, and you and I have spoken about this, it was one of the bullish reasons to own gold, because we saw that those people were losing the control that they had. In fact, some old traders that I've talked to, one that I follow a lot on the internet, wrote to me today, he says, Pete, they may be dead because they should have been showing up by now. And I said, hold on. Those folks are like herpes. They may disappear for a while, but they will show up again. They will come back. It's going to be at what level do they come back and what impact they have. But you're right. The physical market, something that should have always overruled the paper market, has pounded the paper hangers, that we used to like to call them, I don't know, into submission, but certainly in a big retreat. And we'll have to wait to see when a correction and consolidation comes, what kind of actions we see and what kind of, if we start to see these 6:05 p.m. trying to sell $1 billion on the Globex, that's usually a sign that the paper people will be back. But right now, you're right. And you know what? That's not going away. The people in Asia and all, they have been buying it because they don't want to own dollar-denominated U.S. securities, stocks, or bonds anymore. In fact, if it wasn't for the U.S. stepping up, citizens, and buying treasury bonds, we would have even yields much, much higher. Bonds are a lesser of two evils, but they're still not anything great to run out on. And can I make one quick point? If you would take heed, I would tell the people, look at the talking heads who started in 2022 telling you about interest rate cuts are just around the corner. They're coming in early 2023. Then early 2023, they pushed it off. Then 2024, it's going to be 7 of them. Remember, we were supposed to have 7 minimum interest rate cuts. And now we have 1 Fed governor. We have 3 in the last 2 days telling us it may not be to 2025. That really is going to impact, especially the stock market. And so I would caution everybody, and this word transitory, which we know is never going to be stated by anybody but the Fed, I think soon you're going to hear them not talk anymore about 2% interest rates and 2% inflation. The genie's out of the bottle. You and I had this talk the last couple of times, the inflation genie. Once that genie gets out of the bottle, she don't like going back in. In fact, only one time she was able to push back in, and Volcker had to almost bring us into a depression to do so. So I think higher rates of inflation, not higher, but just higher rates than what we've been accustomed to, are here to stay.
A lot of people are confused about higher interest rates and higher gold prices. How do those two make sense together?
Elijah, think about what the gold bears were telling us. We should go back about a year ago, and all the guys, when it was 17, 18, they were talking about, oh, it's peaked, it's rolling over, it's going to maybe go down to 1,000. Why? Because rates are going to go higher, inflation's going to go higher, the dollar's going to go higher. Okay, dollar went higher, inflation went higher, interest rates went higher, and gold's at 2,400. Keep that in mind. You know, there were a lot of bears. You know, for a while there, I considered myself one of the true few gold bulls. Listen, your livelihood is that. You're entitled to be bullish on that. Just like a guy working at a car company should be bullish on the fact that he thinks his companies manufacture good cars, and I make a better one than that other company over there. But there were not a lot of mainstream people, which I am, and that's my livelihood is basically in the financial service community, that were banging the table at the same time about gold. And even today, what do some of those same people, now I'll tell you where they went. And that's why I'm one of the many, many reasons I'm against it. They went into cryptocurrencies. They went into something thinking some new kid on the block is going to replace the old man, gold. And they gave all the reasons for it. And all the reasons that they gave happened, what went up and what didn't go up. That's why, and something that's worked for a couple thousand years, you really want to wait till you see it not working at all before you think it's not going to keep on working. It's some people now, if I may add this spiritual thing, because with you, I know I can get away with it. On some things, people wouldn't like me saying this. There's some people out there now think there's an expiration on some Bibles. That counted, but now that it's April 19, 2024, it doesn't matter anymore. No, things matter and continue to matter. And gold has worked for thousands of years. And there's nothing yet on the block to suggest why it shouldn't work for at least our lifetimes or more. And I know that's what you want to hear and people want to, but that's just what I believe. And I think it's very, very important now for people listening to understand that a lot of financial advisors, even if they choose to want to have an open-minded, their firms won't let them have an open-minded. That's why I never expect gold to be major part of a recommended portfolio, because they haven't figured out a way that they can make a lot of money in it. They did with Bitcoin. The things that they hated. There was one guy that runs black. He hated black. He called it every name in the book. Suddenly it's the greatest thing in the world. Well, it just so happens that they brought in the biggest exchange traded fund in order to trade it. And my argument was, when he takes his money in Bitcoin versus dollars, then I believe he believes in Bitcoin. So be very careful. I would just say this to people outside of that, maybe just clients of yours. The financial community does not understand gold. It doesn't understand the BRICS. Look, we run out of time. Let me say this too, Elijah, because I'm kind of pumped up today, I guess. The BRICS are going to be the biggest thing that Wall Street missed out on, that was totally incorrect about. They have no idea of the concept of what is transpiring, how so many more countries are going to be wanting to be away from the United States, not trade with the United States, not be involved in its securities and all, and that impact on us. I still get scoffed at. I got scoffed at today by some financial guy at a luncheon when I brought up, that BRIC thing is a fag. In fact, I expect they'll be leaving soon. Nothing can be further from the truth on how they're working and moving and developing. So be very careful that a lot of financial advisors there are playing with less than a full deck of cards. And if you don't have a full deck of cards in the world going forward, you're going to get beat in most hands.
And a lot of people say, well, it's just some small nations that are, moving in this direction. But China and Russia are not small nations. It's definitely a major movement of large geopolitical players.
Elijah, 40 now have seriously made what's necessary in order to go to the next step to become members. And while this is happening quietly, they're building all the things, they're setting up systems, they're setting up banks and so forth and so on. And let me ask you this, does anyone really think America, given everything that's happening, how we handled Afghanistan, what is going on in Ukraine, how they look, how we're handling our own selves here and all, do you really think we're more appreciated now than we were 10 or 20 years ago, or less appreciated? If you fall on the latter, trust me, you can understand why BRIC formations. And here's the killing one. Yellen and others continue to talk about one of the stupidest things we would ever do as a nation, to use the money that's frozen from Russia and give it to Ukraine. That's the very reason why countries want to leave and get away from us, because they said if they did it to Russia, what would ever stop them from doing that from us? Why do we want to be in a system where they control it and they can do that to us? And there's serious movement in Congress in order to not have to put up supposedly our own money to do that. And that would be the final death blow. And if it occurs, it just accelerates the issues that I believe is going to grasp America.
If people are interested in learning more and finding out your work, where can they find you?
Well, if they still stayed listening to and didn't throw a tomato at the screen by now, it's petergrandich.com. I'm mostly on Twitter. That's where I like to do most of my commenting. I also have a YouTube channel where I get blessed to put on interviews such as yourself. And occasionally I speak to some people as well.
Fantastic. Well, Peter, thank you so much for your time, and God bless.
God bless to you, Elijah, and best wishes to you. Continue being willing to allow someone like me to put our faith not only on our sleeve, but in our words.
Thank you so much, Peter.
God bless.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 15th through April 22nd, 2024, while supplies last. First, we feature backdated 1-ounce Silver Kangaroos at $3.19 over spot. We also have 2024 quarter-ounce Gold Eagles at $69 over melt. And finally, we're offering 90% constitutional silver at just $2.75 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.